Over the past couple years, I've made several videos covering the YieldMax ETFs. Ever since they first appeared in 2022, their extremely high yields have captivated a lot of people, especially income investors. As an income investor myself, I've mentioned that despite their high yields, these ETFs haven't aligned with my investing strategy. Although I have said that these funds can be profitable in the short term, there's always been two things that have made them unappealing to me. The first is their variable and typically falling dividend. When I invest in a dividend-paying holding, I want to be able to plan a budget around it. I like investments that offer more predictable distributions, which makes budgeting easier. If you look at any of the dividend histories on any of the YieldMax funds, you'll see right away that they can have some pretty significant swings from month to month. If you're planning a budget for retirement, whether an early retirement or on time, it would be very difficult for a lot of people to rely on these funds if you don't have a lot of money. Most of these funds have trended downwards in terms of share price and distribution since their inceptions, with only a couple of them remaining relatively stable for now. So that's been my first issue with holding these funds. My second long-standing issue was their lack of diversification. With TSLY, for example, you're only exposed to the share price movements of one stock, which is Tesla. The same is true for MSTY, CONY, and everything else this company had to offer at the time. There was a third concern I mentioned a couple times, which didn't actually pertain to the funds themselves. But since the very beginning, I've always found it very strange that this company does not like to identify who's behind YieldMax. If you go to the About Us section on their website, it says the following. YieldMax ETFs was founded by ETF industry veterans with decades of experience in income-focused investments, option strategies, portfolio management, fund risk management, and fund operations. You will not find a name anywhere on this website. It only gives the names of the companies that operate their funds. This is unlike every other investment company I've ever come across. It's never hard to find the CEO or the fund managers over at Global X, Neos, PIMCO, or wherever. Who exactly are these ETF industry veterans, and do they actually have the experience that they claim to have? But over the past few months, the people over at YieldMax have been making changes, and all of these changes have been addressing all of my concerns for these investments, and I'm sure many other people have had. For one thing, we've had YMAX for most of this year, which is the YieldMax Universe fund. According to its description, the YieldMax Universe Fund of Options Income ETFs, YMAX, is an actively managed exchange-traded fund that seeks to generate current income. The fund is a fund of funds, meaning that it primarily invests in assets in the shares of other ETFs rather than in securities of individual companies. So in other words, it's an ETF that holds ETFs, specifically YieldMax ETFs. This is a step in the right direction when it comes to adding diversification, which is known as being one of the most important things to being a successful investor. Second, probably over the past few months, the fund manager at YieldMax, whose name is Jay Pestrichelli, has been going on a bit of a media tour here on YouTube. He's appeared on several YouTube channels in which he's given more information and done live Q&As. But I do like the fact that the manager behind all these funds has been more transparent. If you didn't know, Jay is also the manager of Defiance Funds, which has brought us QQQY and IWMY. Additionally, some of the YieldMax funds now pay weekly dividends. YMAX, along with a few other of their ETFs, switched from paying monthly to weekly in September, which surely has enticed even more dividend and income investors to consider them. But all of these things aside, what I think is worth focusing on most is what Jay announced a little over a month ago. Apparently, the YieldMax funds recently went through a change in their investing strategies. And according to them, this was done in a bid to try to capture more upside, which has been the biggest source of ridicule for these ETFs. Now, over on our Discord, there are some people who do hold YieldMax funds, and all I do is remind them of the risks involved. But I regularly get questions about what my thoughts on YieldMax are now. What do I think about YMAX since it resolves the no diversification issue, and how about their new fund strategy? Are any of the YieldMax funds, specifically YMAX, any more attractive today than they were in the past, even for just a very small part of someone's portfolio? So today we'll look at these things and see if that might actually be true. First, we'll look at YMAX, and as I was combing through this ETF's holdings, I found something that I wasn't really expecting. I won't go through every single holding that's inside of this fund, but as of October 31st, it looks like this ETF holds 24 different YieldMax ETFs. It has all the popular funds that you'd expect, including TSLY, MSTY, NVDY, and so on. But according to its holding summary, YMAX apparently has some exposure to Bitcoin, and not their YieldMax Bitcoin Options Income Strategy ETF, ticker YBIT. If I'm seeing this correctly, it apparently holds call options on BITO, the ProShares Bitcoin ETF. I wasn't expecting to see this in their holdings as it has nothing to do with this fund's objective. I would say most YieldMax investors I've known don't oppose Bitcoin, so most probably wouldn't view this as being an issue. It doesn't hold YBIT, which I have to wonder why you would use options on a different Bitcoin ETF instead of holding your own options Bitcoin ETF. From a share price perspective, YMAX does appear to be better at offering stability than the individual YieldMax ETFs. YMAX is the dark blue line, AMZY is in yellow, CONY is in light blue, and TSLY is in orange. You'll see that there hasn't been any dramatic share price swings with YMAX compared to all the others. Since it launched 10 months ago, YMAX has fallen roughly 15.5% in share price. Although it's a lot, when looking at the other YieldMax funds, it's fallen quite a bit less than average. Remember, this ETF currently offers a yield of over 66%, so according to their website, YMAX has given investors a 14.28% return since its IPO 10 months ago. So this diversification does appear to be working better compared to their individual ETFs like TSLY. But what about this updated YieldMax strategy that'll hopefully provide better upside? On September 6th, the company released updated fund prospectuses with the following quote: "Effective immediately, each fund will at times opportunistically sell a credit call spread instead of selling a call option when their fund manager believes doing so will be more advantageous to the fund's total return. As a result of this opportunistic strategy, rather than capping a fund's potential gains when the value of the underlying security shares increases, as would occur with the standard strategy, the fund may experience greater upside participation." There is a longer description in the fund's document if you're interested, but I'll summarize it in plain English. If a fund uses a call spread, it can result in better share price growth than just a regular covered call. But here's the catch: the managers have to decide when they're going to use it. It says that they can at certain times, not that they actually will, and they have to do it at the right moment. This change was made less than 2 months ago, and as of right now, we just don't have a lot of data pointing to whether or not this strategy has been effective. Comparing TSLY to TSLA over the past month, TSLY is still down about 3.5 times compared to TSLA. So with all these things being looked at, let's ask the most important questions here. First, do these changes make YieldMax better? Now that we have YMAX and an updated strategy, I would say yes, but do these improvements make YMAX or any other fund by YieldMax a more worthy consideration for someone looking to live off dividends? And to that, I would still have to say no. And what people need to know is that Jay himself has never endorsed the idea of depending on YieldMax distributions for your replacement income. He's done live streams where he's mentioned that the dividends these ETFs pay are supposed to be reinvested. That appears to be the original intention of these funds, which was to never rely on them for your retirement income. I'm not naive, I know that some people watching this are still going to want to give these ETFs a try. So if your heart is dead set on YieldMax and trying them out, this would be my suggestion. First, I would only suggest holding YMAX. This offers you the best diversification out of anything they offer. Make it an astronomically small part of your overall portfolio. Finally, if there's ever a serious stock market crash, then dump it immediately. If there's ever a 2008-like crash again, then these funds will get obliterated. Again, I really appreciate that YieldMax has been making improvements to their funds. I like that they added diversification, they added transparency, and they are concerned about the falling share prices. But speaking specifically about an investment that I can retire early off of, this company currently doesn't offer any safe investment in my opinion. You can make money off these funds in the short term, but even Jay himself hasn't endorsed living off their distributions. With that being said, thank you all for watching today's video. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.